Hey guys, welcome back to my channel, No Anxiety Investing, where you can invest with peace of mind. Today we're going to talk about my favorite Canadian bank stock right now, the one I've invested the most money into, the Canadian Imperial Bank of Commerce. This is not the biggest, this is not the most popular Canadian bank stock, but it's the one with the most short-term growth potential. Maybe not long, but definitely short-term. We're going to talk about why here, guys. Right now I have the 5-year chart up, okay? Currently, we're sitting at $123, and the chatter around the stock is, when is it going to split? Everyone keeps asking this question. Now, you've seen in the 5-year chart, it's hit $120 multiple times, and now we're at all-time highs. But in order for Canadian banks to split, it's an unwritten rule, but they need to hold over $120 for 2 to 3 consecutive quarters. We have not achieved this in the past, but we will achieve it this year in 2021. I'm going to go over why, okay? A good reason is that they have the absolute most amount of money sitting on the sidelines. So when the OFSI tells the banks they can continue with share buybacks and dividend increases, CIBC is poised to do very well. And just as a side note here, guys, if we take a look at their dividend yield, 4.75%, they are either the number 1 or number 2 highest yielding bank right now. They do battle with Nova Scotia depending on the day and their share price, but this is great and a great addition to anyone's portfolio, even at $123 a share, okay? It's only going to go up from here. Now, let's look at their 2020 numbers versus Q1 2021, okay? Total assets, up. Deposits, way up. It's fantastic. And loans, here we go, guys. Now, their loans are up, and this is a good thing. Don't think of it as a negative, like they're borrowing money. They're the ones loaning the money out. Don't forget that. We're talking about a bank. Now, their market cap, they're currently Canada's 4th biggest bank. This is not a joke. They are a huge company, guys. They're not in the RBC territory, and this can be a good thing because they have some growth in their future. Let's take a look at where they get their money, okay? Their net income by region. This is the only problem I have with this bank right now. If you look at the Canadian portion, 68% of their income is coming from Canada. Canada's doing great right now, as good as they can, but we need the money to come from the United States, where they're only getting 19% currently. This is the world's #1 economy. This is where we're going to see the biggest growth, okay? This is where we need to invest the money, guys. CIBC they're trending upward on it. We're going to get into the numbers a little bit later. We have some reasons to be positive in the future, but we just need to keep hitting America hard, guys. This is where we're going to make our money. Now, back to the positive stuff. If you look here, guys, it says they have the #1 mobile app for 7 consecutive years. Okay, this is from user satisfaction and also total user percentage. This is huge. In my last video, we talked about fintech being a possible disruptor for the Canadian banking system. I talked about it in my TD video. TD has the second best app, and that's great for them, and I love that company. But being #1 here with CIBC is going to pay dividends in the future for us. This is how we're going to get the youth, the younger generations. They care about the brick and mortar retail store, but they care a lot more about their app. It has to look good, it has to be smooth, it has to be reliable, it cannot be down. If we have an unreliable app, some of these banking apps, they drive me nuts. I've used them a couple of times, and if they're not working, I need instant transferring of my money. If I'm not getting that, you've lost me as a customer. So it's a great thing CIBC is #1 at this. Okay, so their CAGR is also important, 8.8% over a 5-year period. Now, TD is doing better, but this is pretty good, guys. Okay, so this is what I was talking about, their earnings by region. Now, I said we're trending up in America. This is why. If you look back at 2014, CIBC was only getting 6% of their income from America. That's kind of garbage, okay? But now we're getting 19%, so this is showing an upward trend. That is mobility. This is where we're gonna, feel good about the bank, because if we can keep moving it up and up and up, this bank is gonna grow exponentially. Earlier, I talked about their dividend being either the highest or the second highest with a 4.75% payout ratio. Now, let's take a look right here at their adjusted dividend payout ratio, guys. This is the safety of their dividend, in case anyone didn't know. Right now, we're sitting at 40%. This is fantastic. With the amount of money that these guys pay out per share, which is $1.46 per share right now, and they're only paying out 40% of their earnings, I'm smiling if you can't tell, because this thing is posed for growth in the future. It's going to be great, guys. Now, let's take a look here when it was at 60%. Okay, this is during the worst part of the economic downturn in 2020. Okay, 60% for most companies is like super healthy. Okay, so 40% is don't even worry about, don't even think about it. This bank, as any of the Canadian Big Five banks, have never missed a dividend payment. This is why you can invest with no anxiety. You can sleep at night. 40%, it's amazing, guys. I'm smiling. I can't stop smiling because I have so much of my money tied up in these guys. I can feel so good about it. All right. Now, their long-term payout ratio, their goal is to pay between 40 and 50%. Okay, so right now I just showed you they're paying 40. So they're at the lower end. What does this mean, guys? You guessed it. They are poised to increase dividends. They will definitely increase the dividends as soon as the OFSI drops all the regulations, which will be soon, as I talked about in my Canadian banks video. Now, I do not expect them to raise their dividend as much as TD. TD is in a higher growth phase. Why? Because of their investment in America. They are making more money from the United States than CIBC is. Therefore, they're getting so much more in income and they can raise it more. To be honest, that's what's going to happen. But CIBC, like I said earlier, has the most money sitting on the sidelines. So they're going to be able to do a lot of share buybacks, which will also increase the share price. Okay, that's why I'm talking about them being the #1 Canadian bank for short-term growth. Okay, we're going to get a big pop, guys. Anyways, 40 to 50% is healthy. It's safe. I like what they're saying here. They're not talking about keeping it in the 70% range, which is unhealthy. They have a smart management team and they're doing everything correctly. All right. Now, let's talk about their lending portfolio. This is super important to know. They're a bank. They make most of their money from lending. So let's take a look at where it is. 66% is consumer. I like this. What's the most? Mortgages, guys. Real estate secured lending. 58% of their portfolio is from this. This is a good thing. They dominate the Canadian mortgage lending business. I'm not going to dive too far into this because the video will be half an hour, guys. I'm just going to give you some highlight points so you can understand. I go over the whole presentation. I read the whole thing. I know all about it, guys. I'm giving you what's important, okay? Now, I just told you the Canadian portion is the highest. This is a good thing, and here's why. This is really important to take a look at here, guys. Now, the mortgage interest is generally not tax deductible for Canadians, right? Unless it's an investment property, okay? For those of you who don't know, Americans can write off some of their mortgage interest. So why would they pay off their mortgage? It doesn't make a lot of sense. It's not, in Canada, it makes more sense to pay it off because you can't write it off. It's not a tax deductible thing. Canadians want to pay down debt more. And here's a graph that shows exactly this. Okay, this isn't my opinion. This is the truth. Okay, this red line here represents the Canadian number of mortgages in arrears. Super, super, super low. The black line is America, okay, super high at a point, but, coming down, and the blue line is the UK. We don't really care about them too much right now for this example. But as you can see, the Canadian defaulting of mortgages is the lowest out of these three countries, and it's really not even close. This is why it's perfectly acceptable to have our money in mortgage lending, okay, guys? 40% of the Canadian population lives in one of the 4 largest cities, okay? Why is that important? Because a greater rate of urbanization is a strong contributor to increasing property values. Now, if you buy a property a year ago and it goes up a ton, but you have to default on the mortgage, guess what? You just sell it, you make a profit, you pay the bank back, and you can rent, okay? So it's not a big deal in Canada. We have the best real estate market. I am a bull on it. Some people think it's going to come down. I'm not one of those people, guys. The future is bright, and CIBC is in the right spot. So their loan balances are up 10% year over year, and their deposit balances are up 42% year over year. I'm sure you guys have heard on the news that, people are hoarding money. This is great for the banks, guys. This is a huge source of income from them, okay? Now, here's the most interesting part here. Non-interest income is up 20% year over year. A bank makes most of their money on interest, right? Everybody knows this. But in this low rate environment, we need to branch out in different ways. We need diversification. Now, that's where non-interest income comes in. To have it up 20% year over year is great, makes me feel really good. Now, the Royal Bank of Canada makes the most from non-interest income. They are the biggest. They make the most. But we are making steps in the right direction, guys. I put $60,000 of my hard-earned income into this company. I think I'm up over 50%. It doesn't matter how much I'm up because I'm never selling it. I love it. We are poised Great spot for the future, guys. We're going to make a lot of money on this stock. Buy and hold forever. Do not worry about short-term fluctuations. But for those of you who care about what happens in the short term, this stock will go up. I told you why. They got the most money on the sidelines. They will increase the dividend. They will buy a lot of shares back real shortly. I hope you invest with me, guys. Let me know what you think about this bank. Let me know if there's any other stocks you want me to cover. Thank you for listening to the whole thing. I hope you subscribe and like. Till next time, guys.